It's tax season, and you are beginning to receive multiple tax forms in the mail from your mortgage company, banks, investment accounts, and work W-2s. As you're probably focused on filing 2019's taxes in the next few weeks, I'd argue now is the time to prepare for next year's tax season. I'm Mitch Hockenbury, and I'm going to take you through the new tax withholding estimator on the IRS website. The Tax Cut and Jobs Act threw everyone for a loop in the way they prepare their taxes. So this year, 2019, is perhaps an anxious one for many. But guess what? Next year doesn't need to be. In fact, I'd argue it is easier for the masses going forward. The IRS did us a great favor in their new tax withholding estimator to figure out how much you should withhold from your paycheck. Is it perfect? No, but it is really nice. So let's get started.
Okay, so here we are on the IRS's website. You can clearly see that up here. This is obviously the tax withholding estimator. I'll make sure that I put a link to the actual URL, the website URL for this. But you can see right here, here's some things that you need to have handy so that you can go through this estimator. It's really important that we do this because you don't want to find out that you owe like $2,000 on your taxes. And then some of you like to get a big refund. It's like a forced savings account for you. And so this is going to help you kind of go through that stuff. But get your most recent pay statement. If you have any other sources of income, so if you have a side hustle or another business, make sure you have that. Income tax return is good to have. And then make sure you do whole dollar amounts only. The other thing to make sure that you see, and you can see it highlighted here, itemized deduction for mortgage insurance and medical and dental expenses. Those are not included in this one yet. So come back to this later in the year when this isn't here if you want to actually put that in. But anyway, just something to think through. So there's some really good little points in here that you can click through. I think the frequently asked questions is a really good one. So you can click on that and be taken to a bunch of their facts, and you can see them all through here. But anyway, we're going to go right into it. So let's get started. We're going to do a hypothetical couple because I'm trying to do this for the masses. So I'm not going to do a business on the side, but I can show you where that will be. So let's just say you're married, filing jointly. No one could claim you as a dependent. And then I'm going to say that you have a kid. So you're going to have one kid. And then, federal income tax is withheld all the time. You're just going to have one job because you're really good at sticking with that job. Your spouse is going to have a job. You're going to stick with that. You don't have a pension. And then you're not getting any of these other types of incomes. But again, you can see how robust this is, that it's actually asking those questions, even some demographic questions, because there's credits that are available if you're blind and if you're over a certain age of 65 is what it showed on there. So you're going to hold this job the entire year. You get paid every 2 weeks. As I record this, it's actually February 1st, so I'm just going to say the last pay period was here, and the first person is going to do, I'm just going to do both of them making the exact same dollar amount, $55,000, no bonuses. If you have it, obviously put it in here. All right, so now we're pulling out that pay statement. Of course, I don't have one. I'm making things up, but let's just say that they pay $200 a month, so $100 from each check towards the federal income taxes. So year to date would be 200, and from the last check was just 100. And the reason is because I showed you we're just doing the first month of 2020. Hey, you're good. You're going to save some money. You're going to do 10% towards your employer plan, so that's $5,500. Man, if you get an HSA, do it. But I'm just going to go with you don't have an HSA. Spouse going to keep their job all year long. Same thing again. Through the last pay period was the end of the month. Again, $55,000 and no bonuses. Okay, so year-to-date amount 200, and we're going to go with 100 from the last paycheck. Yes on this one. The spouse isn't doing so well. Only going to do 2,500. Let's just say that for fun. No HSA or FSA. All right, now we just go to the next step. Pow. And we're going to take the standard deduction, but you could go in there and do your itemized, and if you do, here they all are. But, you know, we're going to not do that. Oh, and we're going to tax credits because I want to see how the kid gets it in there too. So child tax credit. You have one dependent, child tax credit. So we've got one kid under the age of 17 in this case. That's a nice thing. It's $2,000 a year of a credit. And you can go through and show if you have federal tax credits, or foreign tax credits, but there's educational stuff. So if you're paying on towards higher education, there's retirement savings if you're doing like a deductible IRA, homeowner if you're going to put in your mortgage interest credit, a business if you have that side hustle, if you're getting a credit for it. But anyway, so here's what's really cool. Here's the results. And you can go back and change any one of these things, but here's what's really cool. You may owe taxes at the end of the year because you're not taking out enough. Remember, we just said $200 a month, $400 in total for $110,000 of total income. So it's really just saying, hey, look, you're only going to pull out $5,000, and we think that you owe $68, so $1,872. So here's what's pretty cool is you need to hold $33 more on this one and $52 more on this one. Remember, they're making the exact same dollar amount. Well, why is the difference? Because remember, this one was doing $5,500 towards a 401k, and this one was only doing $2,500. But what's pretty neat is you could just click this download pre-filled form. So remember, you got to hold $33 more, and watch this. Bam, there is, okay, 34. So it's just saying extra withholding of $34. You need to go in here and fill in this stuff too, you know, so I put in Mitch, Hockenbury and all that good stuff. But it's already doing it for you, which is pretty sweet. And then, you know, for the spouse, this one should be 55. Oh, what happened there? 52. Oh. Well, maybe it's from the first one. Yeah, maybe it's the first one. At any rate, let's try that again. See if it works this time. Ugh. All right, well, it's not working. But anyway, so there's bugs in it. But then here's the other thing that's kind of cool. Let's say you want to actually adjust things. So they've got this little slider. And here, there's that 1,800 that kind of gets you to where you need to be. But watch this. So you could say, hey, I want to have a big refund. And to do that, then you need to hold $118 more and $149 more to kind of give you that forced savings account. I'm not going to give up on this. I'm still looking. Okay, there's 136 on that one. So anyway, pretty cool that it actually kind of helps you out with this thing. And then, you know, you go back in there and adjust things if you need to. Here's the adjustments. So let's say that, you know, you've got your HSA. I pay alimony, that kind of stuff. So I think this is a really good estimator, withholding estimator that they, you know, the last one that they used to have was garbage. But this one, get on it, start now, and that way you're ahead of the game. So when you're doing this year's taxes, so 2020 taxes, you know, next year in 2021, you're more in line with where you want to be, so you're not owing taxes and you kind of get it right where you want it to be. All right, cool.
Much to withhold if you want to get as close to zero refund or close to zero as owing as possible, or for those out there that enjoy the big payday of a refund. Thanks for watching, and please subscribe to the Personal Finance Made Clear YouTube channel.